This video is sponsored by the trading brokerage Moomoo. Use my link down below, deposit $100 with Moomoo, and we each get 5 stocks, and each of those stocks, get this guys, is valued up to $3,500. So get your free money from Moomoo, link down below, and let's get right into the video. All right, guys, so let's talk. The stock market's about to close in 5 minutes from now, and it looks like, unless anything catastrophic happens in the next 5 minutes, which I doubt, it looks like we're going to have a pretty solid green day. The S&P's up 0.7%. We have the NASDAQ up a nice 1.5%. We have the Russell up 0.6%, and the Dow is up about 0.1%. And volatility came down in a major way today. The VIX went down about 5%. So we're going to break down the markets in this video. Stocks, you guys know the deal. So hit the like button, subscribe. Make sure to join my Patreon if you want all my moves. That's linked down below. And let's get right into the video. And this is actually the second time that I'm filming this video. I just filmed it, and I was going to edit a little bit, tweak a little bit of things here and there, you know the little YouTube stuff, right? And I noticed there was this weird sounding, I think the audio got messed up. Every couple of minutes it would be screechy, it would be like this, like that, and there's no way I could release that. So here we are. I'm making the video again, and we're going to roll with it. So look at what's going on, guys. We're selling off, and we're actually selling off a lot more aggressively into close than we were when I filmed this video the first go around. So maybe we have some more things to talk about now. I guess that's a good thing in hindsight. So look, SPY's currently up 0.6%. The head and shoulders we talked about earlier is still intact. We have the left shoulder, the head, the right shoulder. You guys can see that on this 10-day chart. And this is the point where you have to watch, right around 453. Notice how, and mind you, that's the neckline roughly of this head and shoulder. Notice how we failed there pre-market today, and now we're failing in real time. Look at this. On the intraday chart, we're selling off aggressively into the close. Markets are about to close in 3 minutes. We had a nice little blow-off top rally in power hour here, and then ever since about 340, so about 10 minutes ago, 15 minutes ago, we sold off from about 452 on SPY down to about 449. So this has gone down about 0.7% in just the past 15 minutes. So we're seeing clear resistance at the neckline of the head and shoulder. We're selling off like crazy into close. That is not a good sign for the bulls in the short term. Now, I have my alert set at 453 because next week's a whole different beast, guys. We're probably going to see a lot more volatility, and who knows, we might break out a 453 next week. So watch out for that, and keep your eyes on Triple Q, of course. The NASDAQ 100 ETF here, this, like SPY, is also failing. It's struggling at the neckline. We're struggling at this 180 moving average on the 4-hour, actually this is the 10-day chart. But a good thing that we are seeing in the short term is buying pressure around 355. We've discussed before that was resistance for a good part of the end of January, and the fact that we're seeing buying pressure above an old resistance, we're holding it as support, that's a very good sign. So Triple Q, we're bouncing. Now it just needs to break above 360 followed by 365, and that is where a lot of bullish momentum could take over. That's where the head and shoulders will be out of the window, and we might even take out the recent 372 high. Who the heck knows, guys? So Triple Q doing pretty well today. Everything's doing well across the board again. Like I said, volatility's dying down. We have a lot of big tech names up. Amazon's up 13%. We have Snapchat up 60%. We'll talk more about those two stocks, Amazon and Snapchat, later in this video. We had Tesla up 3.7%. Markets are about to close in about 15 seconds, so get ready for that bell, guys. Tesla's up almost 4%. DraftKings is up 7%. Coinbase up 7%. Again, Amazon's up 13%. We have good old Google up 0.4%. What's Apple doing today? Is Apple red? Oh, geez, guys, look at that. Apple's in the red today. It went down about 0.3%. Baba's down 1%. Visa's down 1.4%. So let's talk a little bit about some of these stocks. We'll get to Amazon and Snapchat, but first, let's get into DataDog. And by the way, if you guys are finding value in this video, make sure to hit the like button. Do it. I know you didn't do it yet. If you didn't do it, hit the like button, subscribe, and drop me a comment. Let me know your thoughts. And don't forget, get your 5 stocks from Moomoo as well. Link down below with a $100 deposit. So let's take a look at DataDog. And the funny thing is, earlier today, I mentioned how I haven't been able to spot inverse head and shoulders in a couple of days, a couple of weeks, maybe 1 or 2 weeks. And lo and behold, look what got presented to me. DataDog, right? I was looking through some stocks and I pull up this chart and I'm like, holy crap, DataDog, inverse head and shoulders. The stock today went up 9%, and they report earnings, I believe, on the 10th. Let me double check that. Yeah, that's next Thursday. So DataDog, inverse head and shoulders. It closed right by the 180 moving average resistance on the 4-hour chart, which is also right under the resistance that stems back almost a month, being about $154. So if DataDog breaks 155, starts going high 150s, 160s, that is where momentum could take this to the completion of the right shoulder in the inverse head and shoulders, which is right at about 180 to 185. Now, is this guaranteed? Absolutely not. Nothing's guaranteed, guys. Don't listen to anybody that's telling you this is going to happen for sure. But by the looks of it, and I've studied these patterns a lot, and I've seen a lot of them, if this plays out, it could go anywhere from, let's say, a broad range of 170 to 180 to play it safe. Lower end, 170, higher end, 180. So keep your eyes on DDOG. That's a nice way to say it. DataDog, DDOG, ticker symbol DDOG. The next one is yet again another inverse head and shoulders. Look at that today, guys. Today, we found 2 inverse head and shoulders. It is QGen, at least I like to call it QGen. Ticker symbol QGEN. Look at this. Inverse head and shoulders ahead of earnings next week on the 8th, I believe, 9th, which is what? That's Wednesday. I guess they report on Wednesday in the morning, so pre-market. Look at this. Left shoulder head, right shoulder. We have the neckline at about $48, $49. We broke out of the 50 SMA, and if this takes out this week's highs, look at this, guys. We struggled at about $50 this week on QGen. If that breaks next week, I could see this go to 52, 53 a share, upwards of 55 a share. That's where the right shoulder in this pattern would complete. So keep your eyes on DDOG and QGen. Nice inverse head and shoulders forming. Now, let's take a look at Amazon. So these markets, like I've said a lot in my recent videos, have been volatile. And this is nothing new. I personally expected this. I talked about this on my YouTube channel openly. I've been seeing signs of upcoming volatility for months. I mean, it makes sense with everything going on with the Fed. We're not going to get into that in this video. And recently, volatility's been cranked up, right? We had the Fed meeting, the relief rally after Apple and Google earnings, and then Facebook reported the stock market dumped, and then it was all on Amazon's shoulders. Amazon reported. Now the markets are ripping into the weekend. So this is classic volatility. I mean, this is it. This is it, guys. We're getting it. We're getting a nice batch of volatility here. And at this point, Amazon is approaching a major resistance. In fact, we're at the major resistance, which has been resistance for a good 6-7 months since June, July, more like July, August of 2021. And that's right by the 180 moving average here. And we're already seeing a bit of selling pressure kicking in. Look at this. Amazon was at, on the intraday, you guys can see $3,300 yesterday. We've already cut about $150 off of that high. So it's now at $3,150. In other words, it has dropped about 5%. And yeah, I mean, I'm not convinced that Amazon is going to break out until it actually breaks out. So we just have to be patient with it. You know, this could be a bull trap. This could easily dump back down as we see more volatility, which is what I'm worried about. I think a lot of people could be getting sucked into the market here. You know, I'm not talking about long-term investors. If you're investing long-term, you can buy, and especially if you're buying S&P 500 ETFs or total stock market ETFs, you can buy pretty much whenever in dollar cost average and be good. But if you're a trader and you're looking at this Amazon move as a breakout for the market, it might be a bull trap. That's in the very short term here. So we have to be careful and understand the different perspectives. Again, we have long term, who don't really care about the short-term stuff going on here. And a lot of you guys still watch my videos, which I do appreciate you guys. And you got the traders, which are watching very closely the day-to-day. So Amazon's interesting, guys. It's going to be an interesting week next week, to say the least. Same with Snapchat. I mean, this thing is disgustingly, insanely, I don't even know what to say. This stock has been moving like no other today. These swings are just wild. Not as wild as what we saw back in March of 2020. I mean, it's comparable. It's kind of comparable, at least. You know, this stock was 24 bucks yesterday after falling because of Facebook. So it was down to 24 bucks. It was down 25% on the day. And then after hours, they reported they shot up 63% at their peak, I believe. And they saw a bit of selling pressure pre-market. Now we ended up taking out the highs, which is just insanity, guys. We took out the post-earnings highs, which were at about $39.87, $39.80. We hit $40.65. So wild moves. And intraday, I mean, Snapchat probably went up 20%, maybe even more. So these wild moves are what we're seeing in the markets, and Amazon's the same, or Snapchat rather, is the same as Amazon in terms of being at a moving average resistance right now on the 4-hour chart. You got to be careful with Snap here. If it breaks, that could be the start of a reversal, but as of now, as the way things stand right now, this could end up being a bull trap. So let me know your thoughts, guys. What do you think on Amazon? What do you think about Amazon, Snapchat? And the other ones that I want to look at, number one is Holx. Did you guys see they reported earnings, I believe 2 days ago? They did EPS of $2.17 versus $1.28 estimated. They did revenue of $1.47 billion versus $1.18 billion estimated. So they double beat. Very, very nice earnings. And this one's now trading above the 180 moving average on the 4-hour chart. Volume's kicking up. We're seeing some nice momentum. And it seems like we're approaching, slowly but surely, the top of this channel. So will we break 76 to 77 bucks? That's what I'm personally watching out for on Holx here. If that happens, this probably could go to 80 plus in the short term, but it's just too early to tell. You know, is this earnings momentum going to continue into next week? Is this a bull trap? It's too early to tell, but I am watching it. Ticker symbol HOLX. I just got a comment about Clorox on the YouTube channel. Let's pop Clorox up. Oh, geez, guys. That's right. I think I saw this on CNBC. Wow, 14%. Look at Clorox, guys. This thing got destroyed since the peak of the pandemic, right, where everybody was freaking out buying toilet paper and wipes and sprays every day, right? I mean, you remember those times. This thing went to 240 bucks and it just hit 140. So since the peak, it is down 40%. They must have done awful with earnings. Let me see here. Underweight rating, hold rating, sell rating, underweight, price cuts. That's all I'm seeing here on the live news tab. So let's see what they did. I know they reported, was that yesterday? Yeah, it was yesterday. Let me see here. 84 cents. Oh, wow. They did 66 cents EPS. That missed the 84-cent estimate. Sales beat, though, 1.7 versus 1.66 billion estimated. So they missed wildly on EPS, but sales barely beat. That EPS hit's got to be hurting them right now. All these negative analyst firms, I mean, this stock is getting clobbered, and rightfully so. I mean, if it gets to the low hundreds, it might start to become a value. Heck, it might be a value now. I can't even say, quite honestly. I can't intelligently talk about it because I haven't done the back-end research on it yet, but if it drops another 20 bucks a share, 30 bucks, I mean, who knows how low it goes, but since it's a falling knife, it could go lower. It might open up to be a value play. We just got to wait and see. So watch out for Clorox. JP Morgan as well is starting to gain some momentum towards the moving average here. If we take out 155, I think JP Morgan could start ripping out from there. It's too early to tell, but next week we'll see how banks are looking, financials in general. So watch out for JP Morgan. And would you take a look at crude oil, guys? 90 plus a barrel. So at this point in the very short term, I think this needs to cool off a bit. I don't think it's going to go straight to 100 a barrel quite yet. I think we will get there at this point in 2022 at some point. But in the short term, I think crude oil, just looking at the chart, I think it's a bit too stretched. I think it needs to come down to 88, maybe 86 a barrel, and then we'll probably continue the uptrend from there. And it seems like we're already getting some red candles on this 4-hour chart. Let's see if those manifest to more selling. I don't even know. We'll see how it plays out over time. And XLE, which you guys know, I'm a big proponent of XLE. I've been in this for months as an investment, and I just got into it as a trade about maybe a week or two ago, probably close to 10 days ago. I bought swing shares as at around, I think, 65 something. So I was thinking, going back to what I said on CL, it's a bit overbought in the short term. And now I'm filming this video after hours, and the first video I filmed during the session. Again, this is my second take here. It's all good. I might end up selling out of these. I don't know. I might do it after hours. I might wait until next week. I don't know. But I think, again, CL's a bit hot. If that comes down, XLE is going to come down on the short term, and I might have to buy the swing shares back if it comes down to about $63 or maybe even lower. So I might lock the profit in on my swing trading shares. But don't worry, guys, because I'm still long-term on the long-term investment shares on XLE. So overall, that's pretty much it. Stellar day to end off the week today. The markets did very well. We had wild moves in Snapchat, Amazon, Coinbase, even DraftKings. A lot of these smaller cap stocks ended up doing very, very well today. So how did you guys do today? How did you guys do this week? Drop me a comment. Let me know your thoughts. And if you all found value in this video, hit the like button, subscribe. That would really help me out. I appreciate you guys. And feel free to join my Patreon if you want all my buys, sells, call outs, morning update videos, private Discord access, more access to me throughout the day. All of that's on Patreon, link down below. And now is the best time to join, considering it's the beginning of the month. Join. If you don't like it, cancel it. If you like it, keep it. You guys know the deal. So check the Patreon out, link down below. Make sure to also get your 5 stocks from Moomoo. Use my link, deposit $100. You could get up to 5 stocks, each of which are valued potentially up to $3,500. Get your money from Moomoo. I'll catch you guys later. Keep crushing the markets. Peace out.